All right, welcome back. Today's explainer is an incredibly compelling look at Nuix, the global data intelligence software company, and their highly anticipated 1H26 financial results. Okay, let's dive right into this because right out of the gate, there's a metric that's completely reshaping how the market views this company's entire trajectory and their newest AI platform.
148%. Just let that sink in. This staggering number represents the annualized contract value, or ACV, growth specifically for their Nuix Neo platform. We're not talking about a slight uptick here. It is a massive surge. This metric really acts as the ultimate hook for understanding Nuix's recent turnaround story. Driven by a really fast-paced migration program, Neo's ACV now makes up a full 20% of the company's total ACV. To unpack all this efficiently, here's our roadmap for today. We'll cover the 1H26 financial surge, the AI tech behind Nuix Neo, the Linkurious acquisition, some current roadblocks, and finally, their future roadmap.
Starting off with Section 1, the 1H26 financial surge. Let's look at the broader financial context of the report to see exactly how that 148% Neo growth impacts the whole business.
Now, what's really interesting about this slide is how robust both the top and bottom lines have actually become. We're looking at half-year revenue hitting 121.2 million Australian dollars. That's a solid 15.2% increase. But the real standout? That'd be the Adjusted Management EBITDA at 19.1 million, which is up a remarkable 42.6%. This expanding profitability is heavily supported by a higher mix of multi-year deals, which basically pushed their profit margins up to 15.8%.
And the cash generation is just incredibly healthy, sitting right at 149%. That's their free cash flow conversion rate. This exceptional conversion means the company is efficiently turning its profits into actual cash, leaving their net cash position at a very solid 57.8 million Australian dollars. Simply put, they're generating the capital they need to fund their next big technological steps.
Moving into Section 2, unpacking Nuix Neo. Speaking of technology, let's translate the complex software jargon behind this growth into clear business value. What exactly is Nuix Neo doing differently? At the heart of the Nuix Neo platform is what they call cognitive AI, or COG AI for short. You can think of this as the actual brain behind the platform's efficiency. COG AI is designed to enrich raw data, automate those tedious, repetitive workflows, and deliver pinpoint accuracy when identifying sensitive elements, things like personally identifiable information. It's effectively taking all that manual heavy lifting right out of massive data investigations and legal discovery. And this brilliantly illustrates the night and day difference for their clients. Legacy processing in this space was historically manual, so much slower and honestly often pretty disjointed. Nuix Neo, on the other hand, delivers 4 to 5 times faster processing speeds. In fact, Nuix reports that 90% of projects are production ready within just 24 hours, thanks to these automated workflows. It's an absolute game changer for efficiency. But hey, speed is only half the battle, right? Data security is absolutely paramount. Listen to this real-world anecdote from Dorsey & Whitney LLP, a major law firm adopting Nuix. They noted, "The AI enrichment tools, or cognitive AI, lives within our Nuix environment. Our customers' client data is not being used to train any external models. This is just absolutely critical for law firms and regulators. By keeping the AI models entirely in-house, Nuix ensures strict data privacy." So the crucial point here is how this advanced technology directly drives the financials we saw earlier. When Nuix migrates an existing customer onto the Nuix Neo platform, it typically lifts that customer's annualized contract value by 30 to 50%. Furthermore, new Neo deals are generally 2 to 3 times larger than non-Neo sales. The tech is quite literally driving a much higher quality of revenue.
Thank you for watching. Please like and subscribe to our channel.
All right, Section 3, the Linkurious acquisition. With a strong cash position and a clear platform vision, Nuix has also shifted towards strategic mergers and acquisitions, specifically integrating graph technology. Nuix recently signed an agreement to acquire a Paris-based company called Linkurious. Now, interim CEO John Ruthven stated, "The acquisition of Linkurious is an exciting accelerator for our strategic vision to enable our customers with insights from complex data at unparalleled speed and scale." Basically, Linkurious specializes in visual graph intelligence, which allows users to visually connect the dots between super complex digital evidence and human behavior. It's a perfect fit for the Nuix ecosystem. Let's break down the exact financials of this deal. It represents an enterprise value of up to 20 million euros, but it's really smartly structured. We're talking a 12.5 million euro upfront cash payment, 2.5 million euros in Nuix shares, and then a performance-based earnout of 5 million euros spread over 24 months. And importantly, Linkurious is a very financially healthy addition. They delivered positive EBITDA and operating cash flow in 2024 and bring in roughly 7 million euros, or about 12 million Australian dollars, in ACV. To fund the cash portion of this acquisition, Nuix actually utilized an upsized 50 million Australian dollar debt facility. Maturing in 2029, this gives Nuix a really solid long-term liquidity runway to fully execute their integration. Moving to Section 4, Roadblocks and Risks. Of course, to truly understand a company's position, we have to impartially look at the whole picture, and that definitely includes the current headwinds. Right now, Nuix is navigating a few key variables. While growth is strong in North America and EMEA, the APAC region is presenting some performance challenges. They're also still waiting on specific French regulatory approvals for the Linkurious deal. And, while net dollar retention remains over 100%, a 5.9% churn rate does show there's still some downsell risk to monitor. We also need to neutrally note the ongoing legacy issues. Nuix is currently navigating a class action led by Shine Lawyers. This is a legal proceeding seeking compensation on behalf of shareholders for alleged financial losses regarding Nuix Limited shares. Alongside a few other regulatory actions, these matters just introduce a level of ongoing uncertainty regarding timing and outcomes that the company is actively managing in the background. Finally, Section 5, the future roadmap. Despite these headwinds, the core business continues to march forward. Let's move to and see how this builds into their future roadmap. Looking at the technological milestones planned for the second half of FY26, the Neo platform is set to see some rapid evolution. Nuix is prioritizing expanded SaaS and cloud deployment. They'll be integrating those new Linkurious knowledge graph enhancements, introducing a really cool bring your own AI models capability, and rolling out advanced semantic search tools. They're aggressively pushing to keep their software right at the cutting edge of legal and investigative tech. And this technological roadmap really underpins their financial confidence. 240 to 260 million Australian dollars. That is Nuix's reaffirmed FY26 ACV guidance. And crucially, this figure completely excludes the incoming Linkurious revenue. By maintaining this guidance, management is showing deep confidence in the organic trajectory of the Nuix Neo migration strategy. Well, we've covered a tremendous amount of ground in this explainer today, from massive ACV surges and Graph AI acquisitions all the way to ongoing regional and legacy legal challenges. So I'll leave you with this final provocative thought to consider. Will Nuix's staggering 148% AI growth ultimately outpace the gravity of its ongoing legal and regulatory uncertainties? Thank you so much for joining me for this explainer, and as always, keep learning.